Mutual Mortgage. Alyssa is an attorney by profession and by education, but a mortgage originator by choice, right? You're a great resource for a lot of people, and so I appreciate you visiting with me today. I'll let you kind of visit about what you do at Legacy Mutual and how you can help people get a loan, but today we're going to visit about forbearance and kind of what is forbearance, and is that a good option for some of us during this COVID-19? Should we be considering that, or kind of what the pitfalls are in that? So I'll let you take it away. Thank you for joining me.
Absolutely. This is so fun. This is my first live, it's my first attempt to do live, so I appreciate you having me on here with your QuaranCOFFEE. It's a great idea. The idea really is to just come out here for your clients and anybody watching who might have some questions about the forbearance program that started with the CARES Act. That was the relief package that was passed by the government to help with the COVID-19 financial struggles that a lot of people are facing right now. And first, I'd just like to say to anybody watching, I hope you're safe and healthy and well. And I know this is a hard time. Hang in there. We're going to get through this. I think the most important thing right now is to have the people around you that can answer some of these tough questions. Melissa is a great resource as a realtor professional who knows a lot about real estate. She has a lot of her own investments and real estate transactions. So I would definitely use her as a resource. If you have a financial planner, definitely reach out to them. And then of course, your loan officer, if you had a great relationship with them and trust them, or me, if you don't have a relationship with a loan officer, just have some questions about these issues that we're facing right now. I'm always available to help. So we wanted to talk a little bit about foreclosure, not because it's a great, wonderful, positive topic, but it's a hot one right now. And a lot of people have a lot of questions about, struggling to figure out, am I going to be able to pay my bills? If you've been affected adversely by the coronavirus, either indirectly or directly, this could be an option for you. So I wanted to talk a little bit about what forbearance is, the difference between forbearance and deferment. And a lot of people might be familiar with the term deferment. I know I am, because I have a lot of student loans from law school, and they've been on deferment or in an income-based repayment plan. And basically what it does is it just kind of defers the payments. You are accruing interest at the time, but there's no penalty and there's no time frame. So based on your financial situation, whatever they might be, and I see a lot of people who are doing loans who have loans on deferment, medical professionals that went to school for a very long time, really anybody. It could be undergraduate, graduate. But this is not a deferment program. So I want to be very clear about this. If you participate in the forbearance program, that is money that will be due at a certain time, probably at the end of the period that you are granted forbearance. So it works much, much differently than what you're probably used to seeing with student loans or deferment. And it's obviously, and I say this obviously, but maybe people don't understand, it's definitely not anything close to forgiveness. So sometimes if you work in a certain industry, student loans can be forgiven at a certain time, and then you're not obligated to pay that. So that is not what forbearance is either. So forbearance it's a temporary hold on the payments for your mortgage. And you're going to have to pay that money back. The interesting thing about how this is all working right now, and we're kind of talking in real time because every day things change. The government came out with the CARES Act, and they really hadn't ironed a lot of the things out with regard to mortgage servicing and the forbearance program. So they're still trying to figure it all out. So stay tuned. So what I will say is there's still a lot of ambiguity out there about how this is going to work, practically speaking. But the way that they think it's going to work, potentially there's a couple of different options. So that the money that that is put on hold might be due at the end of your forbearance in full. That's not a good option, because any American homeowner who can't make a monthly mortgage payment is probably not going to be able to pay that money in full at the end of the forbearance. That is a real option though. And second option would be, it would become a second lien that's kind of tacked on to the first lien that you have. Like if you have a 30-year fixed mortgage, this could become a second lien. So I guess let's take an example. Let's say you have a mortgage payment of $1,500 a month and you want to apply for the forbearance. You have to apply for it and you have to be granted that by your servicer. And it is an initial period of 6 months, but they are going to allow it most likely for 12 months. So typically, if you're applying for this program, you're probably going to need at least 12 months. So we'll use that as an example. So if you're $1,500 payment, 12 months of forbearance, at the end of that time, you have been in forbearance for $18,000. So if the option is to pay that in full at the end of the 12 months, you're going to owe $18,000. Yeah, which is a lot of money. Now, they might also modify your payments, but we don't know yet, and it's up to the servicers how they will modify those payments. So maybe they will take that $18,000 and spread it over 3 months, 6 months. Maybe they might even be generous and spread it over the term that you took forbearance. So therefore, that would be 12 months in this case.
So but if you think you might be doubling your mortgage payment at the very, very best.
Exactly. So in that example, now you now owe your $1,500 payment plus the $1,500 that you were forbeared on, spread over 12 months, and now you owe $3,000 a month. And then, and the reason I'm explaining it in these terms is because I want everyone to understand what they're getting into. If this is an option that you're considering, please make sure that you understand exactly what's going to happen at the end, because at the end of that forbearance in 12 months, the moratorium on foreclosures is most likely going to be lifted. And if you can't pay that $3,000, now you're going to be in a territory where you potentially are going to be foreclosed on. So, a lot of doom and gloom it sounds like, but I think it's good to just get all this information out there so that everybody understands, listen, let's exhaust our other options maybe before we go this route, or let's get a very clear answer from our servicer as to what's going to happen at the end of this period. I know they're trying to figure it out, so my suggestion would be to get on the website of your servicer and go to the fact page, the frequently asked questions, find out the answers to these questions before you sign up to do anything.
I think it's also important to point out, we were talking before we went live, that if I'm in forbearance and 12 months from now I can't make my repayment of the $18,000 or whatever is due all at once, I can't just say, okay, well, I'll refinance, because until that debt is satisfied and that forbearance is repaid, I'm not eligible for refinance.
It's true. And this is one thing that they're not wishy-washy about. They're crystal clear on this fact. So you can't just say, okay, well, after forbearance, I'll just refinance. They are not going to let you refinance until that whole money is paid back. And that's where it's going to get you, because we are looking at a situation where after COVID-19, the housing industry is going to be a great potential industry that brings us out of this recession, or it helps tremendously. There will be super low rates still. But if you're in this program, you will not be able to take advantage of those rates by refinancing until that amount is paid back. So everybody, again, just want them to be really clear about that option, that it won't be an option at the end of this period.
Yeah, so to me, it seems like probably an option that won't make sense for a lot of people. But if you can't make your payment now, I think it's important to communicate that with your servicer and at least keep those communication lines open, and so that you'll know when they do have a more firm forecast of what forbearance is actually going to boil down to.
Yeah, and I don't want it to sound like again doom and gloom, because they are working these things out. There is talk that the government's going to come in and get a facility for these servicers so that they're not totally and completely out this money that they're not receiving. And if that relief package happens, then I think they're going to ease their standards on how the forbearance payments are collected after the term. But for now, it doesn't look like a great option in most cases. So I would much rather talk to a borrower or a client and say, is there any other thing we can maybe refinance? If you're still working, still have income, can we do a cash out, pay off some of your other debt with that money? Let's get creative and see if there's some other ways that we can avoid this. And if this is the only option, then I don't necessarily think it's a deal breaker and that it's a horrible option, but I would want you to talk to some professionals before you go forward with it.
Yeah, that it's just something that you can't make this decision on a whim and out of feeling desperate. You definitely need to talk to some get several opinions and weigh all of your options for sure.
Yes, yeah, definitely. If you have a financial advisor, again, talk to your loan officer, give me a call, and would love to help you. If you have a loan that's not federally backed, which means if you don't have an FHA, VA, USDA loan, you would want to make sure that your loan was securitized through Fannie Mae or Freddie Mac. And the only person that could tell you that is your servicer. So if you're not eligible for it, then perhaps they have other workout plans that they're willing to work with you on. So I do think that we'll be seeing some programs pop up as some more clarity on the CARES Act comes out.
Okay, super. And so how can we get in touch with you for more information if someone doesn't have a relationship with a lender and they have some questions, or they need help maybe refinancing now while they still have a job, and maybe to restructure some of what they've got going on debt-wise? How can we get in touch with you? And we'll put it in the comments.
Okay, well, I work for Legacy Mutual Mortgage here in San Antonio. I'm in the Alamo Heights office, and you can reach me at alyssa.tamez@legacymutual.com.
Okay.
That's my email address, and I'd say that's the best way. My team and I are still here working full time. I'm out of my home office, as you can see now, but we're still closing loans and working on a lot of refinances. Rates are still great, guys, and I encourage you that if you considered or thought about refinancing, it's such a great option right now for a very large amount of people.
Well, super. Well, thank you very much for your time and your expertise. And then tell me your email address one more time.
Email address is Alyssa, ALYSSA .Tamez, TAMEZ @legacymutual.com.
And what's your office phone number?
210-572-9658. If you call that number and leave a message, I'm obviously not in the office, but it does get forwarded to me here in my home office. So reach out to me. I would love to be of service to anybody out there who has questions. And I hope everyone stays healthy and safe.
Well, absolutely. Well, thank you very much for your time and your expertise again, and for your friendship. So thank you for doing this with me. And I will see you as soon as seeing each other in person is socially.
I hope that's soon. I miss you guys.
And yeah, us too. You take care. Thank you very much.
Thank you.
Bye-bye.
Bye.